Hi, folks. This is Lee with the Market Sense for the week of January 12th, 2021. The charts in this presentation come to us from the Trade Navigator software. And what do you say, guys? Anything happened since last Tuesday? Oh, yeah, somebody attacked our Capitol and democracy almost collapsed. Other than that, no big deal, right? Actually, there are some pretty interesting things in the market here, too. What we've got in bonds here is we've got some serious activity for the first time in a while. They are trying to take bonds down. And as I understand it, the thought is the Democratic administration coming in will probably introduce more stimulus. That stimulus costs money. They will have to finance that stimulus by selling more bonds, and selling more bonds means more bonds on the market, therefore lower prices. Now that's fascinating because the Federal Reserve is desperately trying to keep interest rates as low as possible. Lower bond prices, higher interest rates. Now they don't want that. So they're going to try to buy everything in sight. And it'll be an interesting tug of war to see who wins. But strictly from a technical standpoint, this type of bar is what I call an exhaustion bar. It can absolutely be the start of something. It can be the beginning of a massive breakdown here. But in a lot of cases, it turns and goes back up. They exhaust all the sellers, and after a little further, they go back up. And so what we're looking for this week is if they can get back up to this lower moving average here, which is 170 and a half, 170.16. That will be the target if this is exhaustion bar and they turn back up. They could actually go that high and turn back down again. But that's what the exhaustion bar suggests, is that we ought to see prices at least go back up to there if they turn up. Again, they could go straight down, but if it's an exhaustion bar, they should be back in the 170.16 area. Whether they can do that or not is the fun thing to watch in this market. The support's down around 166.21. And it's long enough ago that it's off this chart to the left, but the actual low for the whole sideways that started in March last year, the low in this contract's in the mid 165 range. I want to say 165.18, but let's call it 16, 165, middle of 165 range. That's the low for this entire period. And that'll still be a barrier of some kind, even if they break down below here. But if this is an exhaustion bar, that's what we're looking for at this point. And that will have an effect on the stock market here. Now, stocks have turned down sort of surprisingly, if you will. Didn't really expect weakness because they closed at new all-time highs last Friday. That's where they closed last week. And now they've come down this week for the first couple days. But this upper moving average here, which is the highest support they could hold, is 37.67. I believe the low is 37.68. That could be close enough. And if it is, then, chances are they'll go back up. I don't know if they can reach the next target up here is around 38.80. And I don't know if they can reach that this week. Well, actually, I know they can. I don't know if they will. But, I know this, I say this all the time. They were at new all-time highs last Friday. You got to give that the benefit of the doubt. You will not make a living betting against new all-time highs. So they're going to turn down at some point. Maybe this is it. But I think if the exhaustion bar works in bonds, I think this support will hold in stocks and they will head back up this week. But again, that's the interesting thing to watch, to see how that behaves here. But that's what we're looking at. 38.80 on the upside, 37.67 is the support that should hold. If they break 37.21, if they break even further, 36.41, and all those different areas, if they get down that low, will they look bad? No. They won't even look bad if they break it. But it'll look bad if you bought them up 150 points higher. But that's what I'm looking for. I think they might turn back up from here, and that'll be the fun thing to watch in this market. And if we look at the QQQs, the NASDAQ representative in the ETFs, pattern looks a little different. They also closed at new all-time highs last week, but they've gone lower here, and that upper support it clearly has not held. They've gone below that. That upper support, by the way, is 314.93, and they've gone all the way down to the middle moving average, which is 311.81. markets don't necessarily, when you're looking across the stock indices and comparing them, they don't always go together. But even when they go together, they don't always match exactly. They just sort of rhyme. So it's quite possible that this middle moving average support here in the QQQs is going to act just like the upper moving average does in the S&P. I'm not, again, no crystal ball says that's what's happening, but it sure could, and that's kind of what it looks like here. So if they can hold that, we're looking at almost 324 up here on the upside this week. And if they should break, I think we're only looking at 306.38 in that vicinity. And again, I know this is horrible, but if they break that, gosh, look at this move. They still look good. And they look long in the tooth, which is why they could turn down at some point here. New all-time highs, folks. Don't bet against it. So that's what we've got for you today. I hope you can find something profitable to get yourself into. I appreciate you checking in to see what we're looking at.